Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time today.
Good afternoon.
Well, let's start with Wall Street, where stocks overnight closed higher. The S&P up by 0.5%. Bigger gains for energy, financials, and real estate, but consumer staples and consumer discretionary were down. What's the story in the global markets today, and where do you see the stocks going with this Fed meeting this week?
Yes, we're still quite uncertain about in terms of how fast the Fed will be raising interest rate. In any case, we already expect about 0.5% interest rate hike on Wednesday night tonight, which will be the sharpest increase since year 2000. And also, they're confirming the plan to begin shrinking the 9 trillion won asset purchases that they have done gradually on a monthly basis, about 95 billion per month starting June. So all that is resulting into some uncertainty in the market. However, though, in the last 2 days, the market has recovered slightly from the Friday's biggest drop that we have seen so far. If you look at the U.S. market overall, from the peak, NASDAQ is down by 25% plus. S&P was down by 15% plus. Even though we might think this is a midterm correction, the size of that is quite heavy, and everybody's concerned about the economic recession. If the economic recession comes through, then the market might be falling further, and therefore people are quite uncertain about the direction of the market. However, if you look at the overall price movement, energy and financials and the real estate are showing rising trend. And even the tech, particularly the semiconductor businesses, seems to be doing quite well in terms of the valuations are looking cheap. So therefore, we have seen the rebound in that sector. So all in all, we're quite uncertain about the direction of the economy, and that's why the volatility remains. I guess for the next few more months, the speed of the Fed's rate hike will affect the overall market trend, and we have to watch and wait and see. Meanwhile, in order to bear that kind of volatility, we have to pick the right stocks that's showing a very strong earnings growth and the sales growth numbers.
Well, Korean stocks closed lower today, though foreigners have returned to net buying the past couple of sessions. Energy shares doing okay today, though, along with some financials. The exchange rate holding in that 1260 range. Tell us about the domestic market.
Yes, if you look at the Kospi index, it declined slightly by 0.11%, and Kosdaq is down a bit more by 0.83%. Clearly, Fed decision is important, so therefore we're waiting and watch and see kind of stands right now. We have seen the biggest decline coming from LG Energy Solution, contributing to the index decline, and if you look at the Korea Industrial Corporation, also showed quite a bit of a drop. All in all, Korea seems to be at a point right now that it is relatively performing better than most of the emerging markets so far. If you look at the overall index, it declined by 15% in the past 52 weeks, which is much lower than the MSCI AC Asia Pacific Index, which lost about 18% per the same period. Main reason for that is because the earnings numbers for the Korean corporations are looking quite good. The first quarter numbers are all coming out, and it's coming in much better than expected. And we are seeing earnings growth much stronger than expected. And if you look at the valuation-wise, Korean equity market is trading a P multiple of 10 to 11 times, which is cheapest amongst all the emerging market that is not necessarily focused on the raw materials, but rather the manufacturing base. So we think that the Kospi is in good position once the Fed rate hike is something that we can understand. Then Korean market will be showing a rising trend at much faster pace, and the foreign investors will be coming back to enter the market again.
Well, Mr. Yu, oil prices are down a bit today. Demand is low in China, but it looks like Europe is going to go for a ban on oil from Russia, which would obviously reduce supply. What do you see happening with oil prices?
Yes, if you look at the WTI crude futures, it's rising by about 1% and is at about $103 per barrel on Wednesday after losing some ground in the previous session because if you look at the demand slowdown that we're seeing from China due to the closure or the COVID-19 lockdown, so that is causing the demand to go down. But overall, the supply side, as you know, a continuation of uncertainty happening about the Russian oil and gas. So that is causing the uncertainty of the supply. All in all, we think that this kind of trend will continue for the time being. But overall demand is expected to pick up as the economy recovers from government's direct investments and government's boosting measures. And that will be happening both sides of the China as well as Europe, and that will have a quite strong demand for the energies. And we think that if that continues, then oil prices are not going to be falling anytime soon sharply, but rather remain at a high level. All in all, we think the band of the oil price will be anywhere between $90 to $100 per barrel for the time being for next about a few months. All in all, supply and demand picture shows that oil will be gradually going down as the economy slows down. We think that, however, though, supply and demand picture shows that the oil price will be remain at well above $80 per barrel, particularly for the natural gas. We think that it will remain well above $7 per barrel.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you very much.